So,
okay, so let me bring up participants and let's make host. You want host or co-host?
if you give us the host, then I can do all the bits.
There you go.
Right, look at this. Good morning, everybody. We are live in crypto land, and the room is filling up lovely. I've worn my blue shirt today, which is like my neutral shirt. You know, I normally have the red or the green, but
I gotta say, I don't know if it's. I mean, I got up this morning. I mean, I've only been awake for an hour, but it was very, very impressive price action overnight across the board.
Everything is up. Yeah, my spot bags are really enjoying themselves. Well, no, they're not really enjoying themselves, but they're.
Well, the spot bags aren't, but Bitcoin is 62 and 62 with a rocket. So that's.
It is good because sorry, I had a figure in my head, but it doesn't matter. But that breaching of the 60 again is fantastic.
And really, to me, the way that it happened, I shouldn't really get into sharing too easily, but look at that. That's a boner candle of all boner candles. And one of the things that we know is that very strong moves get to be kicked off strong. So, I mean, that's the biggest up candle by a long fucking way. If we go back, right, this was the lows. You can see how strong the kickoff off the lows was. You can see how strong this kickoff off the lows was. If we go back, well, was, strong kickoffs off the lows are a characteristic of, no pullbacks here. This is a characteristic of moves that last. So I'm very optimistic about this one. And when I went to bed last night, like 12 hours ago, I was not necessarily as optimistic as I am now. So I think the lesson is every single bit of information we have adds to our understanding. Before we were thinking, yesterday I was thinking, fuck, I hope it goes up. I think it's probably going to go up, but I'm kind of glad that we've got some short exposure here. Now we've got some information going, no, I want to be, I don't want to be short anymore. And so what we're going to get to do today is at 0000 GMT time right now, which I think is in an hour. If we last an hour, we're going to see exactly what FinRev is doing in real time. So we're going to be able to see how much of these positions we're wiping down. Are we taking longs? Are we taking shorts? I think it'll be a really interesting exercise for everyone.
Oh yes.
How is everyone today? How are your buttholes after the royal fucking we all got last week?
Cosmetic Sky. Yeah. I had to read that though. Yeah. Heart back to you as well. Well, I just
amazing humatic. Boy, and Sol continues to be the standout of this cycle. If we compare,
and adding to your winners, that's good. It might make your average price a little bit more, but adding to winners is good. People tend to want to add to losers. I think I could get a bit more, but Sol has been a monster from the start.
I can't sell out for that price. That's bad thinking. So Andrew followed your advice, did the opposite of what I felt. Yeah, that's always good advice. I mean, my feelings are left over from when I was a caveman. So my feelings are all about keeping me safe when I'm being chased by a saber-toothed tiger. And that really doesn't have a lot of impact. It doesn't have a lot of effectiveness now. So what I'm going to do, if I'm thinking like prehistoric Scott, is I'm going to overweight the recent information. the recent information is that, oh, fuck, everything's crashing last week. I should protect myself because I could die from the saber-toothed tiger. Well, for a start, it's not a saber-toothed tiger. And second, the most recent information isn't necessarily the one that I should pay attention to. But if it was 100,000 years ago, that rustling in the bushes could be a predator. I have to stop what I'm thinking about, stop thinking that we're in a bull market. And I think we have some new evidence here. And the evidence is that we're really in this kind of situation here. We thought it was the start of a bull market, but it was really just like the entree, like the prelude to a bull market, like not like I did some digging, and this period here where it went up very fast and then crashed very fast and shook a lot of people out, and then that paved the way for this massive run up. I think that's similar to what we've got here. So I think we're in the great situation of we haven't really started yet. Bitcoin is up a lot, but Bitcoin isn't really, like, I hold some Bitcoin, but it's not really what I plan on investing in. I think a bull market after this, and the first sign of it will be here. Well, the first sign of it will be it not going back down to here. If it does that, everything changes. If we turn around here, or here, as soon as we get above this line, and then above this line, and then above this line, and then above this line, we're getting closer to this line. At this line, we have alt season. So we have, the market has a lot of hurdles, right? But it's got to cross those hurdles one at a time. Now, what you want as a long-only investor is a serious amount of fear, a serious amount of uncertainty. You want a serious amount of doubt. The very last thing you want is for Ian and I to be doing high fives. We're all going to make it. Is 8 figures enough to retire? Any of that stuff. As soon as you see us talking like that, you probably should think that Ian and I are talking like fuckheads. Like, honestly. And it's probably time to take some off the table. So while everyone is scared, this is generally a good time to get in. So while everyone was scared here, this was a good time to get in. While everyone was scared, it's a good time to get in. While everyone was scared, this was a great time to get in. This was even an okay time to get in. This is a good time to get in my view. So anyway, so let me kick it off today. The market's crashed. Are we good to go?
We are, mate, yeah.
Okay. So the market's crashed this week. FINRA have made me a lot of money. Let me just show you how FINRA went. Let's look at everyone's results, and let's just look at everyone's average of results. The purple line here is DYDX version 4, which we've just put on. It started from a higher base, so it started from 0, and these others were down about 0.5. So it's done about the same as the others. Really, really happy with DYDX version 4. So you can see that we wiped out a month worth of drawdowns in a couple of days. We gave back some profits. We made some money. We're going to get back a little bit of profits today because the market rallied so strongly. Now, if I show you the last 6 months, more or less, volatility in returns. Volatility in returns means our returns wiggle a lot. This, we made a lot of money. This, where the volatility of returns doesn't wiggle a lot. And what I mean is that It's barely doing anything. It's going up or down 0.2, 0.5% a day. It's annoying. It's doing nothing. Come on, do something. We are unlikely to make money here. This is money losing territory for our system. Once we start to see volatility coming in, there's a statistical probability of a property of volatility discovered by Professor Benoit Mandelbrot, who invented fractals and chaos theory. And what he found is that once you see the first of these little spikes, you can expect more. And so high volatility regimes happen. And so we are in a period where we can reasonably expect to make good money for a while. How long? We can probably expect to be printing money for at least the next couple of months. And that's the way it is. Let me stop and reshare so I kill that. All right. So the market's crashed this week. It's FinRev did really well for me. I hold some spot bags. Let me show you what my spot bags are. Retardio was down to like 170 grand from 250. It's back up to 202. Dolan Tremp, ignore that. That's bullshit. Let's look at one of my other accounts. No, it's Solana. But anyway, I took it in the ass in my spot bags, and also in my spot bags, I hold some terrible things. I hold some NIA, which didn't do very well at all. I hold some ENA, which was embarrassingly bad. This was my standout pick for the cycle, right? I bought it here I bought it at $1. It's now what, 40 cents, 31 cents. That's terrible trading. I've got a bunch of other spot. I've got some AR. Also did terrible. Bought it way up here. It's down there. I need an alt season for these things to come good. So I lost a lot of money on these. I made a lot of money on FinRev. I lost some money with the meme coins, which are coming back strong. So overall, and my TradFi trend is up 7% for the month. So made $1 million there. Overall, it's a wash for me, but it wasn't a very satisfying time. It wasn't. I can't say that last week was the most enjoyable week of trading I've ever done. It kind of sucked, but there's some good things to come out of it. Our FinRev customers, as soon as the market started going down, started making money. This convexity, what we call convexity, means that when volatility rises, you tend to make money. When volatility rises and you're a long-only investor, you tend to lose money, and we tend to make money. This is a beautiful thing if you're holding some spot bags, if you're holding some crypto in an account and some FinRev over there. When they go down, this one's almost certain to go up. That's a very, very nice thing to happen at extremes. Keeps you in the game. So today we're going to dig deep on the causes of the crash, the unwinding of the yen carry trade. Is it over? What it means for crypto? But first, let's do a quick roundup of the markets. And in this instance, the markets are really the TradFi markets. So let's start with the Nikkei. The Nikkei is the Japanese stock market, which has been on an absolute tear since COVID. It's been one of the strongest percentage-wise. You can see up 120% since COVID. Beautiful. What happened here? It had its biggest down day in recorded history, down 13%, and then it kept going, and then it bounced. This is a very, very big drop. This wiped out basically took it back to June 23 levels, wiped out, a year and a half of profits in a couple of days. This was all precipitated by the Bank of Japan raising interest rates from 0 to 0.5%, or 0.25 to 0.5%. You can see that we've got a strong rally yesterday, a strong rally today, and they just opened, because Japan is open early. You can see they just opened here. So they are accepting the reality of higher prices and not opening down here, indicating that people were selling into this rally. So this is very, very positive for things. The next thing we want to look at is the US stock markets. So why are we checking stock markets when we're crypto investors? Because when things get crazy, stock markets and bond markets and FX markets become the dog, and crypto, which is smaller, becomes the tail. We just get wagged around whichever way the big dogs are going, you know. We're at the back of the pack. Yesterday, when I went to bed, this really looked quite bearish. It was like, what would you see when you're reading that chart, Ian? Ready to get long stocks yet?
No, I wouldn't be at all. I wouldn't have any confidence at all to get
No
in
confidence. It would be a low probability outcome. So what's happened here is we had a bounce after a big drop. We tried to rally. We failed. We went down. We closed right at the point we were. We opened lower, indicating people sold at the open. We tried to rally. As soon as we rallied, people sold into that rally, indicating that they were taking their bat and ball and going home. Fuck this for a game of Skittles. And we closed lower. This is all very shady and sketchy looking price action. Now, the highest probability outcome, what do you think, Ian, is the highest probability outcome is going down to here?
I think that we'll see another downside candle.
Exactly. So when we see a lower probability outcome, which is we tried to go down, we opened a little higher, we tried to go down, we closed up near the highs. This caught everyone by surprise.
This is a classic zigged when it should have zagged.
Classic zig when it should have zagged. Now let's look at the NQ, which is the tech index, which Bitcoin kind of behaves like. You can see the same thing. Now, the point that I want to make here is that in extremes, not all the time, usually markets march to the beat of their own drum and they're kind of connected, but not super connected. When shit gets crazy, everything becomes the one thing. It's all the same turd rolled in a different color glitter. Like all these candles, the Nikkei, the NASDAQ, the E-mini, the Dow Jones, they all look the same, right? The Australian stock market, well, actually it's not open yet, but it's a piece of shit too. Now, let's look at the currencies. So this currency has been, because it's USD JPY, it's upside down. So going up means a weakening of the currency. Going down means a strengthening of the currency. You can see that the bottom fell out of the USD JPY. USD JPY was at 160. It wiped off down to $1.40. Now we're starting to rally. And what we're seeing is that same turd in a different color glitter again. All of these markets are moving together. So the point that I want to make is that if you have one position in these markets, if you have 10 positions in these markets, they're really the same position. Bitcoin too, everything's the same. The other one that I want to look at is interest rates. Interest rates fell and interest rates started to rise in the US. And we can see we've got a general trend of interest rates rising, and that's reversing. Okay, so that's TradFlow markets. Let's look at altcoin markets. These are altcoins. Now, critically, this was the old lows for altcoins. And this was the previous lows for altcoins. We broke support. It looked like we'd recaptured it. It looked like we were off to the races. We've done it again, and now we've recaptured back into that range. This is critical. So the way that I'd like you to think about it is altcoins are in a trading range. You could either place that trading range here, or you could place that trading range somewhere up here. Inside here, who the fuck knows? When we start closing below this trading range, this is looking bad. When we start trading above this trading range, things are looking really good. This is the truth with altcoins. Right now, altcoins aren't getting a lot of love compared to Bitcoin. Now, the last one that I want to look at is Ethereum. Ethereum got absolutely taken out to the woodshed.
Yes.
It was down 21% in the fuckery, and it's the second biggest altcoin. This is supposed to be a fucking blue chip. The fuck, it's a blue chip. Ethereum is trading like it's absolutely destroyed. So Ethereum becomes a riskier bet. So either Ethereum is completely undervalued, it's still the second best crypto, and it's going to come back and overtake all those others, or it's a dying ecosystem and no one loves it anymore, and the fees are too high, and it's dying. What do people think about Ethereum in the chat right now?
What does it mean that I'm totally indifferent about Ethereum now? Like, if you'd asked me this question years ago, I would have said bullish. But today I'm like,
Okay, so what I think is that Ethereum has many problems. I think Ethereum has no love. Its supporters are feeling very embarrassed. It's at the stage, it's completely lost capital to Solana. Like Solana is looking like a better ecosystem, a better buy, a better technology, a better everything. That's usually at the stage where people really, really hate things that they start to go. This is a low probability bet with a high result outcome. If you're into a long shot bet, Ethereum's really a decent long shot bet right now. I wouldn't hold it. But it's not bad. Not a terrible spot. Okay, so today we're going to dig deep on the cause of the crash, the unwinding of the yen carry trade, what it means for crypto. We've done the quick roundup of the markets. So why did this happen? And what can be done about it? Was there anything we could have done in advance? And most importantly, how do you protect yourself from being hurt by this kind of thing in the future? Well, the unsatisfying answer is that we're the tail. And when the dog wags, the tail is going to wag too. So this is just the deal with crypto. You're going to have some of these things that aren't our fault, that haven't got anything to do with us, that's really some old prick in the Bank of Japan opened his big fucking yap and caused everyone to take a shit on their positions, and we got caught in the crossfire. This has happened before, and it's going to happen again. Yeah, that's just the truth of it. So what did happen? And I can't really say it any better than Matt Levine, who writes this great column called Money Stuff in Bloomberg. It's the one it's the one bit of journalism that I know that every single institutional trader I know reads. So I'm going to read it out to you because this is really a great explanation of what happens every time. So market crashes usually have the same mechanism. People like a thing, so they buy it and it goes up. More people like it, so they buy more of it, so it goes up more. It goes up steadily enough that people think, hey, I can borrow some money to buy even more of this thing. Eventually, a lot of very leveraged investors own a lot of the thing. Then something goes wrong with the thing. The price goes down, the leveraged investors get margin calls, they have to sell the thing to pay back their loans, and their losses get big enough. Now that's just normal day-to-day business in crypto. Like that happens every day of the week. But if those losses get big enough that they can't be contained by that asset, and they have to start selling the silverware, they have to sell everything. Things that were fine. They have to sell their gold. They have to sell their gold. They have to sell their silver. They have to sell their Apple stock. They have to sell everything that they've got just to pay back the loans. Now, the problem is that the big leveraged investors who own a lot of the thing that went up, they generally also own a lot of the same things. And they generally also own those things with leverage. So there's a generalized crash in the prices of things that big leveraged investors own. There was a lot of leverage in the crypto ecosystem, which exacerbated this too. Now, there is one special case, and the special case is the only case that you should be scared in, is when the big leveraged investors are banks. Why? Because the banks tend to be interlocking. In other words, Bank A will owe some money to Bank B, and Bank B will owe some money to Bank C at any one time, and C owes some money to D, and they look like separate banks, but they're all connected in weird ways, supporting the economy. And the special case is when banks go broke. This can lead to a contraction in economic activity because no one knows if their money's safe in a bank, and this can lead to really disastrous consequences. That's not what we've got here. That was the case in 2008. Now, investors have a little bit of PTSD from 2008 still, and we're nothing like 2008. So in the case where the big leveraged investors who are getting fucked and unwound are hedge funds, it's mostly fine. It's mostly an unpleasant couple of days and then things go back to normal. So why did this happen? So a lot of people borrowed money in yen to buy stocks and other things. Let's say you borrowed $10 million in yen. The yen goes down 40% in price, which is what it did. You don't have to pay back $10 million. You only have to pay back $6 million. That's a fucking great deal. At the same time, you took that $10 million, you put it in stocks. Stocks have tripled. You've got $30 million on your $6 million loan. That's about as good a trade as you can make. On someone else's money, that's about as good as it gets. Because this was such a great trade, every man and his dog was in on it. Every year, the amount that you borrowed goes down since the USD JPY keeps going down. And every year, on average, the stocks keep going up because stocks go up. Now, keep in mind that the interest rates in Japan are 0.25%. Now, a month ago, I spent with I hung out with our friend of the company, Laurent Bernoux, who's a Japanese hedge fund trader. He's bought as much Japanese real estate as he can. He's bought like $5 million worth of Japanese real estate. They gave him fixed loans for 20 years at 0.5%. Like, how much money do you want to borrow at 0.5%? You want to borrow as much as you can. And interest rates in Japan are 0.25%. So how much do you want to borrow at 0.25% a year if you can put it all in stocks or all in bonds you can put it all in US bonds at 4%. You can put in anything you like and make money. You want to borrow a lot. So a lot of people were borrowing a lot. How much? In total, there's $4 trillion worth of this trade going on. Well, that was great. Except right down here, the Bank of Japan said, well, we've had low interest rates for 30 years. 30 years we've been running 0 to 0.25% interest rates. We're going to raise that just a little bit. They raised it to 0.5%, and everyone freaked the fuck out. This is the USD JPY price. You can see it threw a tantrum. It wiped out a year's worth of gains in a couple of days. That tantrum means that instead of borrowing 10, having to pay back 6, you're borrowing 10, having to pay back 12. And that's a very different trade, right? That's no longer a free money trade. That's no longer a slam dunk trade. This is, whoa, that's a risky trade. And you've got to remember that institutional traders don't think like you and me. You and me, we're trying to make the most amount of money for our families. Institutional traders, what do you think they're trying to do? In the chat, what do you think is their number one priority? In the chat. Nope, not make profit at all costs, not beat the other guy. It's much simpler than that. Not reduce risk. Get a good bonus, kind of. Not lose money, kind of. The number one priority of every motherfucker who works in finance is to not lose their job, is to not get fired. Why? Because once you get fired in finance, it's extremely hard to get another job. These jobs pay millions of dollars a year. A job that pays you millions of dollars a year is a very, very valuable thing. All you have to do, you don't have to be the best in the world. You have to not fuck up enough to get fired. This is the way institutional traders think. They're thinking about their job first and foremost, their bonus second, but really, how do I not get fired? So this trade went from being great to being untouchable in the blink of an eye. Now, the problem for regular people is that when you get margin called, you have to sell everything. And not just the stuff you want to sell, you have to sell everything. And a couple of big Japanese banks, a few Japanese funds, they went broke and they got the everything must go sale speech today, like the one from that movie Margin Call. If you haven't seen the movie Margin Call, that's the best exposition of how it actually goes down in the real world. And I was there in 2008 and I saw it happening in real time. One of my great friends is a executive for Bell Potter, which is a big broker in Australia, and he had been done for drink driving, and I was driving him to work as a favor, and I drove him to work on Lehman Brothers Day, and I was driving him to work in Brisbane, Australia, and he was getting heart palpitations. Like he looked like he was having a heart attack, and we're driving past the hospital. I'm like, dude, let's go to the fucking hospital. You don't need to sit in front of the screen today. And he's like, no, I have to be there today. I have to be there and just watch everything go. But what are you going to trade today? You can't trade today. He's like, I just have to be there. And he sat there thinking he was going to have a heart attack just to be there and watch his net wealth go down. His net wealth went down in a 3-week period from 13 million down to 2 million. And then, thankfully and heroically, he's got it up to over 20 again. It was pretty savage times. Now, is there something that can be done? Well, kind of no. The truth is that we get paid, whatever you're doing in stocks, in crypto, in real estate, people think they get paid for buying in the right area and picking the right house and you make your money. You don't really. What really happens is that you get paid for taking risk. You get paid. The history of humanity is that we are risk averse, and that people who are willing to take risks that other people don't get paid for it. You can't get the return without the risk. And I know there'll be a bunch of storyteller types who are on the internet saying, I predicted it. I told you to get out. Go look at their track records. That you can nearly always, they've been predicting it for a long time and they never made any money on the run up. If you don't take the risk on the run up, you don't get fucked on the way down, but you don't get the reward. This is just the truth of it. Many people think you can get the reward without taking the risk. It's not the case. So why did crypto go down and go down hard? So crypto is one of the riskiest things you can trade. And parts of crypto, if Bitcoin is here, Ethereum is here, Solana is here, altcoins are here, big meme coins are here, like the Pepe, the Mog, the Whiff, and then the tiny altcoins, they're way the hell out here on the risk curve. They are the riskiest possible things that you can sell. Why didn't some of the riskiest things go down the most? Like if we look at, for example, Retardio held up pretty well. Like all things considered, this was Retardio, held up pretty well and bounced back pretty hard. Why do you think that is? Does anyone have a guess? Why? Whereas Ethereum got completely smashed. No selling is exactly right. Why was there no selling? Because all of the investors in this aren't stupid, and they know that if they try and sell 89 million bucks worth of Retardio, it's going to be down here in the blink of an eye. You can sell 89 million bucks worth of Bitcoin. You can sell 89 million bucks worth of Solana or Ethereum. You couldn't sell $1 million worth of Retardio without crashing the price. Mail for Nash, isn't that a strong argument for a barbell portfolio? Yes, absolutely it is. Absolutely, and very smart comment. So this is the same old story. The selling causes liquidations, which cause more selling, which freak people out, which started freaking people out into selling, which causes the price to go down, which causes more. It's a positive feedback loop. So let's answer some questions that I think you've got. Is the bad time over? Having woken up this morning and seeing this, we have a successful retest of the lows. So let's drop it down to a 5-minute chart. And let's make it Bitcoin. So this was the lows. What we want to see is a retest of the lows. So we want to see it rally, and then we want to see it try and go down. And if it keeps going down, it's probably not over. It stopped before here. So we can tentatively say that it's over. And then we want to see it start going up. I think we can tentatively say that the bad time is over here. And we can say that because it's the same in crypto, it's the same in stocks, it's the same in Japanese stocks, it's the same across the board. Across the board. This round of it is over. Now, but fear is a funny thing. Once you've been scared by something, in the chat, are you alert to the probability of a potential crash in the next couple of weeks? Who's a bit like long tail cat in a room full of rocking chairs about that? Who's a bit nervous? Yep. Now, once bitten, twice shy. So everyone's like, I think we're okay. I'm cautious, but I'm really worried about another crash. And I think that speaks for us all. So once you've been scared by something, we're hypersensitive of it happening again for a while. So markets are easily spooked. So the bottom line is up here, we're good. We're bad below here. That's basically it. Sometimes trading can be simple. It doesn't have to be complicated. So let's answer some questions. Do I think the market will levitate straight up from here? I wrote this yesterday, and I thought possible but unlikely, but look what happened. That is a levitate straight up. So the market is objectively stronger than I expected it. Ian, is it stronger than you expected it?
It is, for sure.
Now, let's see, did that carry over into altcoins? Our dark blue line is Bitcoin. Everything below Bitcoin underperformed it, and everything above Bitcoin outperformed it. Sui up 75% from the lows. Ray Pendle, the Pendle was the worst performing coin. It's up 45% from the lows. Sol's up hard. ENA, a long way to go, bitch. It's up hard. So what we're seeing is good signs. We're seeing most of the alts outperforming, and we're seeing the alts that were beaten down hardest performing the best. This is what I want to see. So do I think the market will levitate straight up here? Possible. I'm going to change that to probable. What usually happens is that what I expected was that, like a rock dropped in a pond, I would have expected some choppy bullshit like this. We aren't seeing that choppy bullshit. We're seeing straight up. This is very different than what I expected. It's objectively stronger than it's expected. What it tells us is that every person who was a potential seller sold here. What happens when there's no sellers and there's only buyers? So paradoxically, if you didn't get liquidated, things look really a lot better than they did a week ago. Could another crash happen? What would possibly start it? Absolutely possible. This is a lower probability outcome. What could cause this? Raising rates in the US could cause this. Definitely cause this. But they're planning cuts. Right now, the markets are pricing in a 73% chance of a cut on the 18th of September. They could raise rates in Japan. And yesterday, the Bank of Japan came out with one of those, "We're really sorry. We'll never do that again" kind of statements. We won't be raising rates. A mail for Nash, isn't that connected to the Bank of Japan putting out dovish interest rate talk after the dumpster fire? Exactly so. They realized they fucked up. They promised not to do it again. Richard, when the market sees that it's a paper tiger and not a real tiger, when the real economy deteriorates, yeah. If the real economy deteriorates and they don't print, this could cause another dump. So let's not pretend that we've got 100% chance of going up, because if we felt like we had 100% chance of going up, the markets would already be up and there'd be no more money left for us to be made. What we want as long-only investors is we want fear, uncertainty, and doubt. We don't want it to feel like a slam dunk trade. We want it to feel like, I think so, maybe, I think so, but this could all go very wrong. This is the sweet spot for investing. Why? Because the pussies won't invest now. So you're buying at a lower than fair value. And you've got a bunch of guys on the sidelines who are waiting to see how it all plays out. I'm so glad I'm chilling in stables. Those guys are already really behind the eight ball. Like you saw this, you pulled out at 53 to chill in stables for a while. For one day, you were the happiest guy in the world. At here, you've got some decisions to make, right? You sold out at 54, feeling pretty clever. Fuck, it's at 62. Do I get back in? Do I stay or do I go? I'll tell you what you do is you become a hater and you hope that, just a dead cat bounce, it's going back down here. If that doesn't happen, this guy is going to become more and more sad face. And he's going to have to buy somewhere above here. He's going to have to. What's that going to do? It's going to levitate the market. This is a perfect example of why you don't sell into crashing markets. There's just too much emotion. There's too much chance of you getting it wrong. Most of the time in a crashing market, it's the wrong time to sell. You're better off just holding for a couple of days. If you want to sell, you're better off selling in a couple of days. So what about the election? Well, Trump is the business preferred candidate. I think we all know that. Why? Because markets know that he said he's going to print money, and that he doesn't really understand the consequences of printing money, and he only cares about being popular and people liking him. And the best way to make for a politician to make people like you is to print a lot of money and give away a lot of shit. That's something that the Democrats do as well. So I wouldn't worry too much about that. So what we're going to see is, if Trump starts to win, the markets are probably going to bump a little on expectation, and vice versa, as that thing seesaws closer and closer to November. You do not want to think too closely about that. You do not want to get your own personal views, whether you're conservative or Democrat or whatever the fuck you are. You do not want to tie your personal views into your investment views. Why? Because you won't be thinking with your big head. You know, you think you're not thinking with the smart part of your brain when you do that. And it'll tie your head in knots. It really will tie your head in knots. Should you be trying to time the market? Should you be trying to go, oh, this was the top of the range, I should have sold out here. Oh, this is the bottom of the range, I should have bought here. There's like 10 guys in the world good enough to do this. Don't believe the hype. I'm not good enough to do it. You're not good enough to do it. Don't fucking do that. Nobody gets that right. It's phenomenally hard. Almost every single... Who's tried to do that before? In the chat, who's tried to do that before? Okay, lots of people have tried. Who's got it right? Few times, on average, Graham, on average, total. Add up the time, the money you made when you got it right compared to the money you missed out on when you got it wrong. Yeah, no. This is a negative expected value thing to do. In other words, negative expected value means that on average, if you did this 100 times, you'd lose money. A layman's way of describing that is, it's a stupid thing to do. If you want to make more money in the markets, an easier way, and this is Warren Buffett, it's not me, is to not try and be smarter. It's try and do less of the stupid things. Trying to time the market is the classic stupid thing. Looks easy, really hard. What if we get another crash? Should you sell? Crashing markets are nearly always markets where you don't want to sell into. Anytime you see one of those like horrific days, just don't watch it. Take the day off. Wait for a day or two for the dust to settle. You're probably going to get a better price. You're probably going to be thinking more clearly. You can tell that you're thinking like a retard because you will think, I want to sell the whole thing today. You don't have to sell the whole thing. You can do halvesies. You can sell a quarter of it. If you don't know what to do, selling a quarter of it or buying a quarter of it is usually the right thing. Now, what will make my bags pump? What is going to be great for us? Rate cut, no doubt in the world. The markets love rate cuts. These are the prices that the futures markets are pricing in. We've got a 72% chance, according to the markets, of a 50 basis point. We've got a 55% chance of a 75 basis point, and we've got a 27% chance of a quarter point cut. That's on the 18th of September. Looking pretty good. So the next question is, it's been a weird cycle. Memes, garbage coins pumped, good projects didn't. Like the memes and the real world assets did good. Bitcoin narrative stuff did okay. the stuff that I thought would do great, AI, DPIN, layer ones, it didn't do really good at all. And I'm holding some of this garbage. Like I'm holding here. I don't think memes are going anywhere. I think memes are here to stay. And why has it been so weird? In my opinion, meme coins have sucked capital and attention from better projects. And this kind of sucks, but it's kind of good in its own way too. Well, if meme coins are going to stick around, which ones should I buy? I think it's time to have 5 to 10% of your portfolio in memes, a barbell portfolio like someone was talking about. Now, the ones that I like that have staying power, and these might not be the ones that you like. I like Mog. I like Pepe as an Ethereum one. I like Popcat. I'm big on Retardio because it's undervalued and it's a cult. Retardio is the riskiest of all these, but I think it's going to be a 10x. The rest of them I think are going to do pretty good. And there's other memes that are going to do great. I just think they're a little bit overvalued. WIF will probably go pretty hard. Now, let's take a look at what our systems did over the last couple of days. Let me just load up an account with a long history. So ignore this. This was just an API error on the guy's account. But you can see that, you know, from like the start of 2023, we've got a pretty consistently winning thing here. It's got long periods of sideways, but it always wins in the end. The way I describe trend following is it's a horror movie with a happy ending. So what I want to do here is, first of all, look at what we're holding today. So today we're holding, oh, sorry, I'm not sharing my screen. Of course, I'm an idiot. So this is our equity curve from way back in the day. You can see we're doing pretty good. We're up near the highest price we've ever held. If you hold a random altcoin, you're nowhere near the highest price you've ever held. You're on average, you were down on average 35%, and now you're down 20%. But really, if we look at, you know, the alts you were probably holding, you know, Pendle was down 70% at one point. ENA, which I'm holding, is down 75%. NIA, which I'm also holding, was down 52% at some point. So instead of that, you're up. Instead of being fucked by 30 to 70%, you made money. What are we holding today? We're holding just 2 longs out of 100 positions. Our biggest short position is in VChain, AVAX, ICP. This ICP chart, I can't believe this chart is real. This is a monthly chart going back, well, let's look at a weekly chart. Going back forever. It's basically down only after listing. We should be short this because it's a shitcoin. It's a terrible, terrible, terrible thing. E-gold, shitcoin, OP, underperforming. Bitcoin, we're actually short now. ADA, NIA, FTM, underperformer, Ethereum. We should be short all these things. Now, let's go to the trade history. Well, first of all, let's look at our portfolio. Let's see what we're holding today. In order of size, we've got short, 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 short. We've got 1 measly long in Bitcoin dominance, and then we're short all the way down. Have we got any shorts? Have we got any longs? We've got 2 longs, TRX and Bitcoin dominance. What do those look like? That's not a bad long in TRX. Sorry. We're long in Bitcoin dominance. That looks like a pretty good long. Now, what I want to do today is take you through the actual trades that we did going back to that fateful day. Zoom doesn't like this trade history thing. Monday, 5th of August. Yeah, Zoom's going to keep doing this to me. Okay, so on Thursday, we had, sorry, this is going to get frustrating, but we'll stick at it because I think it's important to, this isn't our software, this is Zoom, by the way. It just doesn't like this for some reason. Yeah, it's not going to be viable. I'm just going to have to tell you what happened. So on Thursday, we held four longs. We held longs in Bitcoin. We held longs in Ethereum. We held longs in Solana, and we held longs in BNB. So this is last Thursday. Which is right here, Thursday the 1st. So we were long here. We were long here. We were long here. And we were long here in a small way. Everything else we were short. So we were short, particularly TRB, we were short OP and storage. I remember we were very short. And you can see why, because they've been going down a lot. Now, what happened when the market crashed is we had four longs. We had 50 to 60 shorts. Those shorts went down far faster and far further than the longs went down. So we lost money on Bitcoin. We lost money on Ethereum. We lost money on Solana. We lost money on BNB, and we made much more on the rest of it. Now, this is last Thursday. You can see what happened. This is all our various volatility targets, all our various, this is various exchanges. Let's just look at, one exchange so we can. So Bybit is not the best and not the worst exchange. It's like what I would call a middle of the road exchange. You can see that this is the blue line is our lowest volatility target. So this is the least risky. The orange line is the most risky. This is 50. The green is 45. The red is 40 and the blue is 35. You can see when we're losing money, the least risky one loses the least money. And it also makes the least money. So that kind of looks like this. This is a least risky kind of conservative, in it for the long run sort of a thing. When it started to go, this was Thursday, Friday, Saturday, Sunday, Monday, we gave some back. And then Tuesday, we started going. Now, the question everyone has is, I wanted to bank profits here. Why didn't I bank profits here? Well, if you bank profits here, then you're out of the market and you don't have the ability to profit when it does it again. So if you bank profits too early, there's a couple of reasons why you don't do that. And the first reason is because the market doesn't know or care how much profit you've got. All that matters is the market going down or is the market going up? And if you take profits here, you can't get any of these profits here. And yeah, on this 2 days, you would have been slightly ahead. But if you did that here, you would have missed out on this. If you did that here, you would have missed out on this. If you did that here, you would have missed out on this. So it's generally a stupid thing to do. On average, it's not a good thing to do. So our systems pretty much covered themselves in glory over the last couple of days. Now, we promised not only that you would make money, but we promised that trend following would keep you safe in the worst possible market conditions. Those are the worst possible market conditions. How's my driving? Rate it. How'd our system do out of 10? What do you guys think in the chat? You happy with that? You not happy with that? 0 sucks, 10 is good. What do you guys think? Be honest. Not unhappy? Looks good. Scott, unless it's total bull season for alts memes, why not keep your bags in FinRev? It's pretty tempting, I got to say. If we get an alt season, FinRev isn't going to do as good as that. If we don't get an alt season, FinRev is going to beat it like a stick. This is the truth. So the last few days proved us right. If you hold spot crypto bags like I do, let's look at some of my spot crypto bags. I mean, this was 250 grand down to 170, back up to 195. I mean, that's like a terrible, terrible. That was a terrible couple of days for me. The combination of stable returns for FinRev and holding coins with 10x potential, this is, to me, this is the optimum for wealth creation. You know, I think I'm going to have $1 million win out of Retardio if we get a bull market. If we don't get a bull market, Retardio is going to zero. Is it worth it for me to have a $200,000 bet that this thing is going to 10x from here and turn into a $2 million, which I can then dump into FinRev and compound at FinRev rates? To me, that's a good bet, but it's not a certain bet. Curious, is it still a leverage season? Yes, it is a leverage season. So what's the conclusion? The conclusion is that was a washout. Everyone who was going to sell sold in the last week. If the market starts going up, it's going to go up faster than expected. And I wrote this last night, and we can already see that the market is going up faster than expected. If we pick any coin, you know, that's definitely faster than expected. Definitely faster than expected. Definitely faster than expected. Faster than expected. Doge faster than expected. The market is going up, and it's going up faster than expected. So by the end of this presentation, you're going to know how to set your positions so you can know precisely which coins are going to explode. If you're still doing spot, which I recommend, I'm going to show you how to do it. So you're going to know how to always be in profit. And this solves the when to sell problem. Because in a bull run, the hard part is knowing when to sell, how much to sell. Nash, probably not yet. Probably not yet swapping into FinRev. You generally swap into FinRev when things are going great, not when things are going badly. What I'm about to show you is an autopilot way to show exactly when to sell. Since the system keeps you automatically in profit, you can enjoy your wealth without having to constantly check the phone. In other words, you're always liquid. You can cash out when you're ready to buy a dream car, buy the house. I actually cashed out enough to buy a house without a mortgage this year. Actually, my dream house. My wife just blew the budget yesterday with, well, my wife, I'm telling fibs there. I blew the budget buying a bloody $150,000 Italian kitchen to go with it. But yeah, it's nice to take profits. It's really nice to take profits. And I'll give you the step-by-step blueprint to actually build your net worth to more than $1 million, to more than $10 million. My net worth is over $10 million, and I've done it all through this way. I know that might sound crazy, but just keep an open mind as you stick with me, entertain the idea this could be possible for you. I need to show you why we're in for the biggest bull market in history and why it hasn't even kicked off for now, and why this one, I think, is going to be the last frothy bull market. Because once the institutional money comes into crypto, it'll just be like another stock market. It'll be good for building wealth over 40 years. It'll probably be a bit better than stocks, but not that much better. You'll never see these in a couple of years. The idea of 1000x gains or the overnight Lambo money, that's not going to be a thing anymore. So to me, this is the time to take advantage of what is the last greatest bull market ever. You need to pay attention to what's happening with crypto right now. But the real problem isn't making the money. It's not fumbling the bag when it all ends. And this is the eternal problem with crypto. Greatest crypto bull markets are, they always end. And it's not how much you make, it's how much you keep. We've all seen that over the last week. So there's no questions off limits. It's nothing held back today. This is the last day of the best deal I've ever offered on FinRev, by the way. So if you want that, or if you want to recommend a friend to FinRev, I've got an incredible offer for you that's never going to be repeated. I'm going to guarantee that you make money out of this. But even if you don't want it, I'm going to show you everything about how it works, and you can implement a simple version of your own thing. And let me just. I'll send you all out a simple version of the rules if you wanted to do it yourself. So here's the plan. So we ride the alt season when we get it using 100x Coin Club picks. When we get an alt season, past alt seasons, everything is 50x, like 50x. You're going to ride that. You're going to cash it out. Not round tripping your bag is the trick, Michael. Boy, good trick too. You're going to cash it out into these automated systems, which aren't exciting. There's no 50Xs there. They're just like steady and smooth and just not getting fucked systems. Steady and smooth has a lot. If you've been in crypto in the last week, steady and smooth is like wife material compared to that stripper that you might want to date. I'm going to show you in a few minutes how we take the profits from the 100x Coin Club. We get about 10xing that on autopilot. Now, you might think that's hype, but since 2019, what I'm going to show you has turned a $10,000 starting investment into $203,000. You're going to see a press button make money system that's made money every single year since we started in 2019. And I'm absolutely guaranteeing you make money over the next year. If you put money in now, I'm going to guarantee that you make money over the next year. And I'm going to cover your losses if you don't. Never heard of that before. It's never had a losing year. It has 4.5 million of our own money making 100% per year. It earns risk-adjusted returns better than Soros and Ray Dalio put together. It works in bull markets and in bear markets. It works in crashes like we had this week. It printed money during the Sam Bankman fraud bullshit, every other crypto disaster. It requires no thinking, no luck, and no predictions. You don't have to follow this stuff like I do. You don't have to know anything about crypto or blockchain. It runs on autopilot. It's created countless billionaires and multimillionaires. It takes the risk out of crypto because it makes money in bear markets too. And 4 of the biggest 10 biggest hedge funds in the world use it. This guy, John Henry, he's a $4 billion net worth, owns a Liverpool football club, the Boston Red Sox. Cliff Asness, who's my spirit animal, he was an academic. He wrote the second ever academic paper on this. Look how smug this bastard looks now. He's worth $1.6 billion. He manages $156 billion worth of trend following. It just works. I've been doing it since 2014 in traditional finance markets, and the results aren't as good as crypto, but fuck, they're pretty good. You know, my returns per year, 18%, 32%, 89%, 51%, 149% year to date. done pretty well out of it. It's all based on the oldest and most consistent way of profiting from any market, which is trend following. What is trend following? It's the simple idea that a coin that starts going up has a higher probability of continuing to go up. That's what it is. When shit starts going up, it's probably going to continue to go up. We see it in every market in the world. We see it in real estate. We see it in stocks. We see it in bonds. There's a $300 billion industry that's been printing money, doing this for 40 years. None of them have ever blown up. It's very safe. Like Dunn Capital's outperformed the S&P by 475% over the last 50 years. My retirement accounts are with my buddy Paul Mulvaney. They look a lot better than this now. This is the S&P 500, which has been a great investment, by the way, the gray line. I've just kicked its ass and now I'm rich. Like I wasn't rich when I started doing this. I was on the bones of my ass. And just through the magic of compounding and time, like I've been doing it for 14 years. 14 years later, I'm worth over 10 million bucks doing this. Hello, little girl. You want to say hello to everyone? You want to get little Dashy? Where's my little dog? Where's my little dog? Oh, there she is. Oh, you're going to put the treat inside. Okay, everyone will attend to work, please. Hey, you're going to sit? You're going to go? Sorry, family stuff. Isn't she gorgeous? She's pretty gorgeous. So the trend following index, this is every firm that does trend following that's been around for 10 years or more. And you can see that the gray line is the S&P 500. It just kicks its ass. It's a better way to invest. I've got like more than 80% of my net wealth in it. Way back in ancient Sumeria, before we even had prices, they used barley as money, and they dug up these. This is a 5,000-year-old city. This is the first human city. They dug up these cuneiform tablets with barley prices on, and trend following works really good on them. And in 16th century Japanese rice markets, they were actually the first futures markets. They knew all about trend following even then, and they had systems. And if you've ever heard me talk about the RTV pattern for retesting lows, that's a Japanese candlestick pattern from the 16th century. I didn't invent it. So this shit that we do, it's all old. It's all worked forever for as long as we've had money. It's worked in Japan before they even heard of Western people, before they knew what a white guy looked like. It's worked in ancient Sumeria before they had money. It's worked in every market in the world forever. These are the returns every decade since 1880, and you can see it hasn't had a losing decade. It has losing years, lots of them, but never had a losing decade. And what I'm trying to say is this is as close to a law of gravity as we get in financial markets. It works in stocks, it works in bonds, real estate, FX, commodities. Every country in the world for as long as money has existed. It works for 10,000 years. Why? Because it's based on human greed. When something goes up, we get excited about it. It's going to the moon. When something goes down, we get scared about it. Oh, fuck. And that part of our human psychology hasn't changed. It's not changing. We're still greedy. We're still fearful. The thing I've discovered, which I bet my whole company on a couple of years ago, which has turned out to be a great bet, is that it works 6 times as well in crypto. And this is our system compared to Bitcoin, which is the yellow line. Bitcoin beats it sometimes, but then shits the bed. Beats it sometimes, you lose half the money. It looks like it's going to be okay, it's not okay. Looks like a good dip to buy, not that dip. Oh, things can't get any worse. Yeah, they can. Oh, they can't get any worse than here. Oh, yeah, Sam can take all your money. And then they go back up. Like crypto is just a wild ride. What we've done is solve that problem. This is not a wild ride. Sure, it goes sideways for a while, but you can still cash out for, on average, 8.3% drawdown. You can still cash out. And this is what we call the greatest discovery in little guy finance. And instead of talking about it, let me show you. So this is a list of all the coins during the earlier bull market this year. And you can see that this coin that outperformed everything, TIA, the green line, you can see it started outperforming everything really early. And all of the coins that did well really started outperforming early. This is something that we see in every bull market. And this is way back in the 2021 bull market, when you really wanted to hold Matic and Doge and Solana. You can see that way before Elon started tweeting about Doge started to outperform all the others. It's the orange line. Way before this is Matic. Sorry, this is Doge. Way before Elon tweeted about it, you can see the red spike here and here. It outperformed everything. Way before Sam Bankman-Fried was the face of Solana, you can see Solana really outperformed everything, and then it ended up being the third best performing coin. This is just the way it works. The second half of the Bitcoin bull market, sand, stupid metaverse gaming coin, shit game. If you've ever played it, shit game. But it beat everything else by like 1,000%. And look, at the start, it really did outperform everything else. This is the way to invest. So you know it now. This is the secret. Like, you wait for a bull market, you see which coins are winning the race in the bull market, you get on those coins and you ride them to the beach. That's how you play bull markets. You now know. There's no secrets here. Now let me show you how to automate that. How to take all the bullshit out of it, how to take all the guesswork, how to take the skill out of it. Let's turn it into a system that doubles your money every year. Just so you don't think it's all hype, I'm going to give, well, actually, no, I'm not going to give you that system for free anymore. I'll give you a document that tells you how to do it. But we can automate this whole thing for you into a press button money making machine. You're going to learn how to ride this bull market for all it's worth, and then compound your gains into generational wealth. If you bought Bitcoin in 2019 for $3,700, I mean, you did pretty well. You know, you back then you've got a compounding return of 57% per year, but we've done 107% per year in the same time. Your drawdowns, you've had to put up with 80% swings in equity. You haven't had to do that with us. You didn't have any of that pain and butthurt that hodlers put through. You had to put up with some boring times. I'm not going to lie. You had to put up with some boring times. Sometimes 3 or 6 months of it just doing nothing. Not going up, not going down. And to be honest, you'll probably bitch. Do you mind sharing how much you have in FinRev? Yeah, let's go to the videotape here, dude. $13 million. Personally, I've got high 6 figures in it. So I've got, depending on how it is, somewhere between 700 and 800 grand. And I've got that split up between volatility targets. This is my, let me show you my highest volatility account. This is one of my personal accounts. This is the, yeah. This is my highest volatility account. I run this at 90 vol. I put in 90,000. I've got 97. And this is what it's holding today. So I've got most of my money at a fairly conservative 40% volatility target. I've got some at 50, I've got some at 70, and I've got some at 90, which is pretty gambly. In fact, if you bought at the top of the absolute bull market, if you bought when Bitcoin was 69,000 last time and it's only 62,000 right now, you've still more than doubled your money. You never had to try and time the exit perfectly because that's incredibly hard. That kind of sucks. You never experienced a losing year. You never got stuck holding the bag when the bear market hit. If you put $10,000 back in 2019, you'd have 380,000 right now compared to 110,000 in Bitcoin and 146,000. Is 11% profit for the last 7 months still going to make the 100% for the year? I think it is. I wouldn't bet against it. Wouldn't bet against it, buddy. In fact, I'll take that bet. And I am taking that bet. The point is, if you put $10,000 in 2019, you'd have $380,000 right now compared to 110 in Bitcoin and 146 in altcoins. So it just beats Bitcoin. It beats altcoins. It's crypto returns without the crypto drawdowns. But the point is that at year 5, you're counting down to a real 8-figure retirement income. And for me, 8 figures is the line in the sand. 8 figures is the number that you can really do whatever the fuck you want, unless you're some idiot who wants private islands and private jets and let's not be dickheads. Like, if you're a normal guy and you want to have a normal guy luxury life and never have to worry about money ever again for as long as you live, that's the number for me personally. And that's my number. And I hit it this year. But once you get to 5 years, you're just a few bends around the corner from hitting it. So if you wish you had a time machine, this is the next best thing. You know, Marty, we have to go back and buy Bitcoins 2011. Let's go. This is really just as good. So I've traded this way in the old market since 2014. It was $4.3 million. Let's change that to 12 million AUD and counting. We've been running it on crypto for a couple of years. The results are incredible. They really are. We really have had incredible results with this. And we offered it to our best clients in the middle of the bear market. And I've shown you the results while everyone else was taking it right in the ass. We did really well, and these are those results during the bear market. You know, there's lots of sideways, lots of false starts, but you never lost money. If you're 104 years old, Freedom, this is probably not for you. At 104 years old, you need more ballast. And I'll be honest about this. Now, you know, the closer you get to retirement, the more conservative you have to be because there's no do-overs. Like, I'm 50 years old. If I fuck up now, there's no second try, I die. You know, my family's got problems. If you're 20 years old, you can push the boat on the risk. Like, if I'm 20 years old, I had a few false starts at 20. I went broke between 25 and 30. You know, it's not really a problem to come back. If you go broke at my age, like, you're fucked. Probably. These are the 2023 returns of the biggest hedge funds in the world. You can see that, aside from one guy who's even worse than us, most of them, we're kicking their asses. Like, we really are kicking their asses. We promised to double people's money in a year, and we did. Every single person who's used this system has made money. Is 50 vol too high for 62? 50 vol is the maximum I would use for 62, Kimatic. I think 50 vol. This is a maths question. It's not yeah, I'll get into it in a bit. So, you know, I've never heard anything in my life where people selling something on a webinar that actually works for everyone. I think I've showed you how it works. Basically, here's our portfolio. Here's the shit that we're holding right now. This is our biggest position. We click on it. We have a forecast. When that forecast is below this horizontal line, we're betting that the thing goes down. When that forecast is above the horizontal line, we're betting that the thing goes up. So all the way here, we were betting that the coin goes up. Here, we're betting the coin goes up. And when it goes back down, we're banking profits. When it starts to go down, we don't get tied into this, but I liked the coin, I liked the founder, I liked the story. None of that matters to us. You know, money talks, bullshit runs a marathon. As soon as it starts going down, we are loyalty less on this coin and we start shorting it, betting that it goes down. Starts to go back up again, we bank those profits, but nothing's to stop us doing what we did and betting that it goes down again. This is what we do again and again and again with every coin. Here's EOS. Look at this bucket of shit. We started betting that it's going down here, and we've just been betting that it goes down all the way. XRP, this has been a coin that I personally hate. From here all the way to here, we were betting that it goes down, but it started to go up again, and we're betting that it goes up. And look, today, all of a sudden, we're betting that it goes up again. So now we're on the XRP train and joining the XRP army. It's a wild ride at 50 volt. It is a wild ride at 50 volt. There is no doubt in the world that 50 volt is a wild ride. That's how it works. We're just buying the stuff that goes up. The further it goes up, the more we buy it. The further it goes down, the more we short it. Hopefully, and historically, the things that go up faster than the things that go down, and it smooths it all out. So this is about creating generational wealth. It's about the compounding. If you compound at 50% per year, which is pretty conservative, after your 10 grand, after 5 years is 61, after 10 years is 332, that's a 33x return. If you get 100% a year, which is what we've done, which I think we'll do, I think we've got another 5 years of this. Maybe. Yeah, I think we've got another 5 years of it. After 5 years, you're 320, but you can see that in the distance, it's not that far to wait before you get that 8-figure retirement where you can do whatever the fuck you want. Our strategy is done on average 107% per year. We haven't had a losing year. What you want to do is just relax and enjoy the ride. Like these day-to-day fluctuations. These day-to-day fluctuations shouldn't concern you much. And I get a fair bit of bitching, like, I was up here, why did it give back all those profits? Oh, it made those profits again today. I get a fair bit of bitching about that. You shouldn't look at this. It's just like, what matters is the long term. And know that if you can keep your hands off the steering wheel, the thing that will ruin this is you trying to second guess it and say, oh, it's not working the last couple of months, I better pull some money out. It's working great the last couple of months, I better add some money in. What you want to do is, when do you take money out of this? When you want to buy something. You want a new car. You want a holiday. You want a house. That's when you pull the money out. That's what I do. I decided I wanted my dream house, and I pulled the money out to buy my dream house. What's wrong with that? We're only here once. If you can not worry about the day-to-day bullshit, you can be highly confident that at the end of the year, you're going to show a profit. Now, it works slightly different in bear markets and bull markets. Bear markets, it goes longer sideways periods, sharp up periods. Longer sideways periods. Now, bull markets have steadier up periods and shorter sideways periods. Steadier, not as explosive. So you can see that the explosive growth that we experienced over the last couple of days could be either. We're not really sure. We're not really sure. And us not really sure is actually a sweet spot for us. So my goal for you is the ability to do whatever you want, wherever you want, with whoever you want, for as long as you want. And for me, what do I want to do? I want to meditate a lot. I want to be fit and healthy. I want to live on the ocean in Thailand, which is where I've wanted to live with my family. And I want to hang out with my dog and my cats and my wife and my kid and watch my kid grow up. And money is just a tool to buy freedom. Compounding does the work. You're not going to make it in 5 minutes. Everyone wants to make it in 5 minutes. You want to try and make it in 5 years. So who's impressed so far? Richard, very smart guy. First, I owe you a big thank you. I mean, for those of you who know me, words aren't alone to thank you. I'm really trying my best here. I'm trying to be the best in the world, trying to build the best trading system I know how to build. It's the honor of my life to grind like an animal every day for the community. And I've got a deal that I've never offered you before. But I've got one more thing to show you. So the next rollout for our system, we've got two rollouts. The first you won't understand if I explain it to you, but it's a portfolio management thing that's going to give us, we think about 0.3 sharp improvement on the system. We're transitioning to what's called rolling window portfolio management. That's pretty cool, but I can't explain it in 10 minutes. It's an hour conversation of nerddom. But what if we could take it from 100 to 200%? And how much faster would that get to where you want to go? And so after 1 year, you're going from, you start off at 10,000. After 1 year, it's better, but after 2 years, it's pulling away. After 3 years, it's ludicrous. So how the really big algo trading, if you want to notice a weakness in our system, let's look at the weakness in our system. Is quite obvious. Makes a lot of money, goes sideways for a while, makes a lot of money. That's the weakness in the system. We're trying to fix this by blending multiple systems. And the whole is more than the sum of the parts. It's just like owning 5 stocks is better than owning 1 stock. When one system isn't working, another system. So we've got our second best system. We've been testing this for like 6 months now with our own system. It works pretty well. Not quite as good as Trend. It also doesn't work great when Trend is working great. So the last week, this system has actually lost money while Trend's made money. But on average, the whole thing has been much more steady, smooth. So carry is one of the strongest edges in finance. There is far more institutional money using it than Trend, even though you can see it's not quite as good. It's 53% a year at sharp 1.17, but it's got very sharp drawdowns, but very steady and smooth run-ups. Now, when we combine these two, you can combine them in any ratio you want. I recommend a 65-35 Trend carry mix. Our head of research, James, he likes 50-50. You might be different. You might be 80-20. At 65-35, this is, we go from 100.9% to 243% per year, but this is a little wild for most people. This has a max drawdown of 34%. I don't think most of you are able to cope with 34% drawdowns. I can, because, you know, I'm used to trading this garbage that goes from like 14 cents down to 5 cents in a couple of days. I don't think most of you can handle that. I would like to dial this down to between 180 and 200% per year. I think that's reasonable, but it drastically improves the Sharpe ratio. We build a custom system for every user. So, you know, we build the volatility target that you want, the blend that you want. We build something that's totally custom for you. And that's the beauty of this. It's not a one size fits all. Freedom does 34% drawdown for breakfast. He's an animal. But the real point is that this is the difference between retiring at 40 and retiring at 50. Now, if you're younger, you can do higher drawdowns. Plenty of time to make it back, as long as you know you're going to make it back. If you're older, you really want to keep this to 20% drawdowns. That's the truth. Now, because this has been life-changing for me and my family, I want to give you the deal of a lifetime. Here's the deal. We've got 3 tiers of FinRev available for you today. The silver is 1,000, the gold is 6,500, and the platinum is 9,500. What do you get? This is 6,500 for 3 years of fully automated trend following trading. That's like $100 and something bucks a month. That is $180 a month. Why do we charge 3 years? Because it's a 3-year thing. You need to spring this out over a long period of time. I don't want, if you think I'll try it for a couple of months and see if it works for me, that's the wrong strategy. That's going to lose. FINREV Platinum is 9,500 for 3 years of fully automated trading. And stick around if you've heard all this before, because I've got an incredible deal that you're never, ever going to see repeated. And I know you're never going to see it be repeated, because my CFO is bitching about it and says we can never repeat it. So FINREV Gold, 6,500 for 3 years, is 3 years of automated algorithmic trading with FINREV. This is what I use. This is the trend following, which I'm most comfortable with, which I've made all my money with. 90 cents out of every dollar I've ever pulled from the markets I've done from doing this. Get a VIP onboarding with our expert crypto trader coaches. You get a comprehensive stats and monitoring. You can delay starting or pausing at any time. So if you think, wow, Rotario is great value at 5 cents, I'm going to hold that until it's $1 and then cash it back, you can do that. And we've got our double your money guarantee is, if you aren't in profit after your first 12 months using the system, we'll let you use it for free until you've doubled your money. Now, the deal that I've got is for today. If you're already using the system and you want to recommend a friend, if you recommend that friend, I'll guarantee that both of you make money in the next year. And if you don't, I'll wear the losses. So you put in 10 grand, it's 8 grand at the end of a year. Not going to happen. I'll give you the 2 grand. It's USD. So let's be clear. The guarantee that I've got, this is the last day for the guarantee, is recommend a friend. Recommend a friend, and I'll guarantee you make money over the next year with it. So if you're talking about putting your money where your mouth is, yeah, I'm a believer. I'm so much of a believer. I'll go broke if it doesn't make you money. FINREV Platinum, slightly different. It's the same 3 years. It's 9,500. It's 3 years of automated trading, same onboarding, the same comprehensive statistics and monitoring that you've already seen, same completely custom system designed to your goals. You grandfathered into new systems. So the new systems that we've got on the drawing board: cross-sectional carry, basis trading, which is steady and smooth, but only about 20% a year. But we add that into the mix just to make it more steady. Cumulative volume delta, cross-sectional momentum. These are the ones that we're working on right now. And we're working on better execution algorithms. So we have the same double your money guarantee. If you aren't in profit after your first 12 months using the system, we'll let you use it for free. If you recommend a friend, we'll guarantee that you make money in the next year, and I'll wear the losses for both of you if you don't. How long is that deal good for? You have to book the call today for another 24 hours. Another 24 hours until that deal's over. And I'll show you why I can't. Let me show you my Slack. And our CFO just like hit the roof. He's like, you can't do this. Let me find his private DMs. So this is my CFO. Good discussion last night. We need to be very specific. We're the most we can offer. We can't guarantee every loss from a legal and a financial risk perspective. Well, fuck that. I'm going to do it anyway. Fuck that. But only for one day, because he's going to. You can have until tomorrow, but after tomorrow, that's not going to be the deal. So this is the best deal that I'll ever be able to offer, because my CFO he's an owner of the company too, and he's going to kick my ass for doing this. So Ian, Howard's a pretty ass-kicking kind of guy, right?
Certainly is.
He kicked my ass a number of times. Yeah. Howard is, for those who don't know, Howard used to be CEO of a medium-sized bank in the US. He was also chief investment officer of the New York Stock Exchange, and he's exactly what you. And he was a vice president of Pepsi Cola. So he's exactly what you think when you imagine like ruthless top-level American corporate CFO. Like he keeps us all in line.
exactly who we want.
He's exactly who you. Yeah, he's exactly the guy that we want to do that job, and he's a good friend and he's a wonderful man. But he is so into my raging yang. So what I would recommend is, if you want that deal, book that call today. You can book the call for next week, but just book it today because those slots fill up.
Nice. So if people are currently a member and they want to get that deal, should they use the RSVP Gmail?
Yes, please. If you want to get that, if you're already a member, don't fill up the calls, and just shoot me an email to Scott Phillips rsvp@gmail.com, and I'm answering those myself. And because I'm like time poor, it might take me a day or two to get them. You'll still get the deal, so chill there. Just recommend a friend, and we'll sort you out. Yeah, there's, at the end of the day, there's probably only going to be 10 guys that we're 10, 20 guys that we're guaranteeing their losses, but this is a no-lose deal. And I think it's appropriate that if I don't make money, you guys don't make money. Like I think that's kind of fair.
It's as fair as it gets, I think.
Well, what right do I have to make money if you guys get fucked? Like that's not who I want to be. That's not who I want to be. And the challenge, as always in life, is how do I get what I want while being the person that I want to be? And when I used to sell TradFi trading system products, and this is real talk here, I used to sell FX trading products, and I made money with my own FX trading systems, and because I'm a very good trader, and I would grind out those systems and I would follow them absolutely, but I would sell my trading systems knowing that 90% of you don't have the skills or the fortune or the sticking power or the ability to just treat it like a job. And I still sold those systems, and I really wasn't comfortable with it. I really didn't like it. Now I'm selling something where I know that everyone who I sell it to is going to make money. So I feel a lot better about myself, really. So let me share that. So just book those calls, guys, or shoot me an email at scottphillipsrsvp@gmail.com, and I'll be answering those today.
Scott, you mentioned
if you need a payment plan, if you want a shorter commitment, if you want a longer commitment, if you want a lifetime commitment, if you're an existing customer, you want to upgrade, just talk to the enrollment team. They're really cool guys. They're like Zach's an absolute man. She's very flexible dude. He'll sort you out.
nice. Sorry, Scott, I must have not been paying attention. Somebody's asking about a document with a process.
Oh yeah. Let me grab it. Here we go. So this is FinRev Silver. This is the research that we did on it. And you could do this yourself with a spreadsheet. You don't really need FinRev Silver. Works pretty good. Let me post this in the chat. Everyone can have it. It's no secrets. You're just buying 20-day highs. It ain't rocket. So it's not rocket surgery. The beauty of FinRev Silver is a lot simpler than our other FinRev systems, because it has to be simple for you guys to if you have a platinum subscription. Okay, so this is an interesting question. What happens at the end of your platinum subscription? Am I going to fuck you for another $9,500? Fuck no. What I'm going to charge you is 20% of the profits we make together, if that's okay with you. If you want, you can do it the other way around, but I think most people would prefer that I don't make money unless you make money. Is that okay with you, Dawes? Yeah. I think most people are happier with my interests and your interests aligning. My opinion is what you guys don't want is a situation where I can make money and you get fucked. The whole idea of this thing is if I'm forced to make you guys money or I go broke, I'm pretty sure I'm going to, you know, by hook or by crook, breaking every rule in the book, I'm going to make sure you guys make money. If I can make money and you guys don't have to make money, well, that leaves the door open for me to do stupid and greasy and crazy things. And I don't want to be that guy that makes money at your expense. I want to be that guy that makes money with you. And yeah, you know, I'm not the guy that I was 10 years ago when I was broke. And when I was broke, I would have done all kinds of things to make money. But now I'm like closer to the end, like I'll be retired in 2 years. Now I can afford, now I got the morals I can afford. Like all of a sudden I'm a lot more of a moral guy than I was. Hey, if you want to feel better about yourself, try making 10 million bucks. All of a sudden, all the little shortcuts you might want to take to make a few dollars, they don't seem worth it anymore. So yeah. So yeah, I think in general you'll find me a lot more honest than probably I was 10 years ago. What happens to FinRev when I retire in 2 years? I'll still be here. I'll have all my money in FinRev. You know, FinRev's gonna take that money and turn it into 100 million for me. So I'll be involved, but I just won't be doing webinars and stuff like that. Freedom, what's the secret to the turnaround? Getting very, very, very clear about what I wanted and cutting every single thing out of my life. And I've got a mindset coach who was really helpful with that. Itamar, who's a friend of the company, who itamarmarani.com is a great guy. If you're looking to turn your life around, I recommend him absolutely. He's been really great for me. He's a ruthless kind of like Israeli special forces psychopath, like undercover Mossad agent guy. Like he'd kill you as quick as look at you. Like I'm friends with him, and if he had to kill me, like I'm great friends with him. If he had to kill me, he'd shoot me and go have a snack. He's that kind of guy. But in terms of like how do I get what I want out of life, like he's been really good for me.
That's fantastic.
We've taken up enough of everyone's time, bro.
I think so. Everybody have a great weekend.
You too.
See you soon.